everyone, welcome back to the channel. I really appreciate you being here. If you haven't done it yet, make sure to hit that subscribe button and tap the notification bell so you never miss any of my future videos. Now, picture this for a moment. You wake up, grab your phone, check your bank balance, and suddenly realize that money is missing. Your stomach drops, your heart starts racing, and confusion sets in. Then you notice, the withdrawal came from the IRS, the Internal Revenue Service. Sounds terrifying, right? You're definitely not alone. Every year, many Americans discover that the IRS actually has the power to take money straight out of your bank account. But here's the important thing, this doesn't happen suddenly or randomly. There's a very specific legal process the IRS has to follow before taking that kind of action. So in today's video, we're going to walk through how and why the IRS can remove money from your bank account, what signs you should watch for, and, most importantly, what steps you can take to stop it or even undo it if it's already happened. When you owe the IRS back taxes, they don't start by seizing your money right away. The entire process begins with something simple, a bill. That first notice lays out exactly how much you owe, why you owe it, and what your options are. You can pay it all at once, request a payment plan, or dispute the amount if you believe there's an error. If you ignore that first letter, the IRS won't just give up. They'll continue sending more formal notices. And ignoring those is a mistake a lot of people make. If there's still no response or progress, the IRS may assign a revenue officer to your case. That's when things become more serious. A revenue officer can contact you by phone, show up at your home or business, and even file a federal tax lien. A lien is basically a legal claim on your property. It ensures that if you sell your house, your car, or other assets, the IRS gets paid first. Having a lien is stressful, but it doesn't mean money is being taken yet. The next part is the one you really need to pay attention to, the Notice of Intent to Levy, which might show up as Form CP 504 or CP 45. This is the official warning that the IRS plans to seize your property, including any funds in your bank account, if the issue isn't fixed. After that comes the final and most critical letter, Letter 1058, also known as the Final Notice of Intent to Levy. This is the last warning you'll receive. Once this notice is sent out, you have 30 days to either pay your balance, arrange a payment plan, or request a hearing. If you don't take action in that 30-day window, the IRS is legally allowed to proceed with a levy, which means they can take your money. So, here's what happens once the levy process begins. The IRS contacts your bank and instructs it to freeze the amount you owe. At that point, your bank is required by law to hold those funds for 21 days before sending them to the IRS. That 21-day period is your final opportunity to act. You can still reach out to the IRS, set up a payment plan, or file a request for a hearing. If you do nothing during that time, once those 3 weeks are up, the bank will release the funds to the government, and your money is gone. The IRS can also take a different route and target your paycheck through what's called wage garnishment. In that case, your employer is legally required to withhold a portion of your paycheck and send it directly to the IRS until your debt is cleared. Now, if you're self-employed or pay yourself through an LLC or corporation, it's even trickier. In those cases, you are both the employer and the employee. That means the IRS expects you to withhold your own pay, which can feel pretty awkward, but once the notice goes out, it's a legal requirement. Ignoring it can result in more penalties and even tougher collection actions down the road. So how do you prevent the IRS from touching your bank account or your wages? The simplest way is, of course, to pay your balance in full. But let's be honest, not everyone can do that immediately. The next best option is to set up an installment agreement with the IRS. This is basically a payment plan that allows you to pay your debt over time. Once the IRS approves your plan, they'll stop all levy and garnishment activity. Another powerful tool is requesting a collection due process hearing, often referred to as a CDP hearing. You have 30 days from receiving that final notice to file for one using Form 12,153. During the hearing, you can challenge the levy, explain your financial situation, or propose a payment plan. This is your best shot to stop the levy before the IRS actually takes your money. If the entire situation feels overwhelming or confusing, this is when reaching out to a tax professional or tax resolution specialist can make a real difference. These experts understand how the IRS operates, how to handle the paperwork, and how to negotiate on your behalf. But let's say the worst has already happened. The IRS already took money from your account, and you never received any warning. Believe it or not, that does happen. The first step is to stay calm and figure out exactly what happened. Sometimes people miss the required notices because they've moved, changed addresses, or accidentally ignored letters from the IRS that looked like junk mail. Go back and double-check whether any official notices were sent. If you genuinely never received the proper warnings, contact the IRS right away. Explain your situation, confirm your current address, and ask for a reversal of the levy. If the IRS determines that you didn't receive the legally required notices, they may agree to return your funds. If that doesn't solve it, you can take your case to the Collection Appeals Program, often called CAP. This gives you the right to challenge the levy decision formally. To begin, you'll need to file Form 9423, and it has to be postmarked within 3 business days after your conversation with the IRS collections manager. That's a very short deadline, so act quickly. Again, this is another moment where a tax advisor can be a big help. They can represent you during the appeal, make sure all documents are filed correctly, and ensure the IRS follows its own rules throughout the process. Here's the main takeaway: the IRS cannot just grab your money out of nowhere. There's a clear, step-by-step process in place, and multiple chances to resolve the problem before it gets that far. The biggest mistake people make is ignoring the letters. Those envelopes labeled IRS might be the last thing you want to open, but they're your warning signs and your chance to fix things before a levy occurs. If you're already dealing with the IRS, remember, you have rights. You can request a hearing, you can appeal, and you have the right to representation. What you shouldn't do is remain silent. When you get that first letter in the mail, don't panic, but don't ignore it either. Take action early, get advice if you need it, and you can protect your bank account, your paycheck, and your peace of mind. Because when it comes to the IRS, it's not about luck, it's about understanding the system, staying alert, and responding before things get out of hand. That's it for today's video. Thank you so much for watching. I upload new videos every week, so if you found this helpful, make sure to subscribe, ring that bell, and you'll be notified as soon as new content goes live. Take care of yourself, have an amazing day, and I'll see you again very soon.